Yo, what's up, guys? This is Sir Trevor. Just want to break down the trade that I took on US30, guys. ICC is crazy, and this was like my first time um trading US30, after 2 years. So 2 years ago, I used to trade, Nasdaq, US30, all the indices. But I stopped because I was losing a lot, so I couldn't find like a strategy that works. And this is my first time going back into it because I was trading currencies for the past 2 years. So now I'm just trying to test ICC on indices, and this was my first trade. So before we get into breaking down, the strategy, I just want to share what I've learned from trades by Sai, right? So shout out to him. His strategy is good. So basically, it's just a market structure. The strategy is based on market structure. So the foundation of the strategy is the market structure. So let's say we are in an uptrend. So what you have to know is that when the market is trending into buys or the upside, bullish or longs, right? The market creates higher highs and higher lows consistently. So this is what happens. This is a high, this is a low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, this is a, and so on. Okay. Now what you have to know is that this was the first high, right? And this was the first low. This was the first low. Right. Now, when the market breaks this high, it then creates a higher high. And the reason why it's called a higher high is because it is a high that is higher than the previous high. And this one becomes a higher low because it is higher than the previous low, but it is also higher. It is a low, but higher. It's lower than this point over here, right? It is lower than this point, but higher than this one. That's why it's called a higher low. So now that you got the concept of this market structure into bullish structure. So when the market decides to break these ones, so what you have to know in an uptrend, what is respected is higher lows. Higher lows will always be respected as long as the market is intending for buys, okay, or for an uptrend. So, which means it will respect the higher lows. So, when you want to see that the market will change the direction, it is when the market begins to disrespect the higher lows and begin to break and close below. Very important. So this is called a market structure shift. So which means the bullish market structure, it is shifting to another direction, which is a downtrend or a bearish trend, right? So what will happen in a bearish trend is that the market will now begin to create this low, right? This is the first low. So, and then it will create the first lower high. So this, I already called it a lower high because there was like another high over here. So this is just a lower high. It's lower than this one over here. So this was like a higher high. And the market in a bearish trend will always break these lows, and then it will create a lower low. So the reason why we call this a lower low is because it's lower than the previous low. Now it will then create a lower high, break the lower low, create a lower high, break a lower low, and then the market change direction, make another trend. And so this is what the market does. And then what you have to know is that if the market is not making any of these, so the market might do this, okay? Failing to break, the the higher low or the higher high. So sometimes it might break it and come back inside and then begin to go sideways, sideways. So so when the market is doing this, is basically like in a consolidation, which means it's failing to pick a direction. Okay, it's failing to pick a direction. So this means what you do is to mark, here, all right? And then here. So you want to know which point the market will break, okay? So obviously, when it broke this one, it didn't create a lower high, hence it failed. You can see it turned here. It was a potential lower high, but it failed to break the lower lows. So you couldn't just enter off of here. Okay, you need extra confirmation of which we will get into, but I'm just showing you what the market structure is. So the market moves in three phases: a bullish trend, a downtrend, and a consolidation. So a consolidation, this is a time whereby traders have to stay away from the market. You don't have to trade all the time. So don't try to look for some trades when the market is moving like this. But what's best is for me to show you the real live markets. But before we jump into that, let me show you what ICC is. Okay, now that you know the market structure, what is ICC? So ICC is abbreviated indication, correction, continuation. Indication, correction, continuation. So, all right. So we have the market. Okay, let me start with okay. Okay, let me start with some buys and then I'll end with sells. So let's say we want to sell. So the market, yeah, let's start with sells there. Okay, let's say the market was in an uptrend like this. Okay, creating higher highs and higher lows. Okay, and the market decides to shift over here. Okay, and then it creates, okay, I'll stop here. The market does this. All right, so what you do, so always you have to mark your higher highs because these can act as a resistance and support levels. Very important. So I also mark the higher low and the higher high. Okay. All right. So now when the market is moving in this way, so what you have to do is that when the market is here, you have to see if the market will respect this level over here, okay, or break this level over here, or right. So it's either it has to respect this one over here or break this one. So if the market was to respect this level over here, it wouldn't break below, right? Which means it will turn, even if it turns here, okay, this would be a correction, right? So the market would continue like this. So even if it's closer to this higher low, it will still be a valid higher low. because it's still higher than the previous higher low, right? But if it then breaks and closes below, then the narrative changes, right? So this is when we become spectacle of looking for buys because the market broke the higher low, right? So we sort of like stay away from the markets. But if the market does this, you will then use these zones to enter. So coming into entries will come into there. Now, this is what ICC is all about. Let me show you. We have, let me, so this over here, when the market broke the high, this is an indication. So we're not gonna buy over here. We wait for market to create this indication. This signifies that buyers are in here, right? From here to here. This shows that the buyers are willing to come in to continue this bullish trend. So, but obviously we know the market doesn't move in a straight line. So this is why we have a correction. Okay, sellers are competing with buyers. Okay, they come in here and then buyers continue. And you can see from this level over here, there were buyers here and they continued the market to the upside. So this is what ICC is all about. So we don't enter with the first indication, we enter with the second continuation because anything can happen with the first one, right? You might buy here and the market just rejects off of here and then sells. So this is why I think this is the best model to trade because when it comes to entries, everything is put together to perfection and you make less mistakes. Um, yes, it's not 100% strategy. There's no 100% strategy. But when you lose, you are okay with it because as long as you follow the rules, you know that at that point in time, it will just be the markets just being against you for some other reasons. Could be economical factors, but it's not your fault. But most of the times you will win. I can say I haven't traded like over 100 trades with it, so I can't give like an estimation of the accuracy for the strategy, but I can say the consistency is there, right? So yeah, this is a good strategy. So let's go into sales. Um, all right, so when the market is selling, right, we have this low, we have this high, we have lower low. So this lower low, so when the market breaks this low here, this could be an indication and then a correction and then a lower high, guys. Lower highs are where we most of the times anticipate to sell, right? Okay, let me explain. Okay, so this is a low, right? So it's a support level. So at a support level, we expect buyers to be there, right? And then this is a lower high over here. All right, so market creates this lower low. Okay, so let me explain. So this, when the market broke this lower low, it created an indication that there were sellers coming into this market, right? So we have sellers in here, right? That's an indication. So after an indication happens, what comes next is the correction. The correction is a pullback market retest, okay, coming into this zone. Now, my bad. So what's important is that you don't sell off as soon as the market comes into the zone. So you have to wait for a reaction. So what can happen is that the market can go beyond this and stops you out. So what I mean is that don't just come and sell off here, okay? Because some of you might put a tight stop loss, and then before it even sells, you already stopped out, okay? So you have to wait for the market to react to that zone. So it will then go beyond, and then a candlestick rejection might start forming here. And then as soon as market comes back into this zone, you can start selling over here and then put your stops be above the lower high and then target the previous lower low. So this is how you use the strategy. We trade continuations always. We trade continuations going along with the trend. So we're following the trend. All right. So simple, simple. So we're gonna get into the trade, the US30 trade I got, because now I understand that you guys already get the concept, right? But this needs like you have to uh practice more and train your eyes to see these movements in live charts, because in live charts it's different, and it will become easy for you to spot, how the market moves. But let's go into the live markets. Okay, I already marked up my levels, okay, but I'm gonna delete them so that I can show you guys step by step. So when you come into the markets, you should look at okay, this was the highest point, right? So far. So coming into these markets, we can see that from here, the market was creating higher highs, higher lows. I'm on the 4-hour time frame, was creating higher highs, higher lows, higher highs. And then the market came and broke the higher low. All right. Something that I spoke about earlier on. So when the market does this, you then become skeptical of entering trades and you wait to see what the market can do. So after that, so what I did is that I marked this higher high, right? Let me remove this to not confuse you. So I marked this higher high and I marked this higher low, okay? So, okay, and then I marked the higher high. So I'm gonna explain to you how to know when to stay off the markets and when to enter, okay? I'm gonna be precise, quick, and I want you guys to get this. So the market was bullish over here, right? We all agree, right? Because it was creating higher highs and higher lows before we can think of, okay, let me do this. Before we can think of it breaking this higher low or anything. All right, so which means now, uh, which means we don't want to be involved in the markets in this zone, okay? Okay, let me do this. Okay, so this red block I have marked for you guys, we do not want to be involved in the markets because this is a higher low and this is a higher high, right? So, and this was a previous higher high. So we do not have to enter anywhere here. So once the market is between this previous higher high and this higher low, we do not want to be involved in the markets. We wait, all right? So, which means our only interest for us to enter the markets is when the market comes here, okay? We look to target here, all right? And then if not, if the market decides to sell, we don't want to sell in here. We don't want to do anything in here, but we will only look for sells below here, okay? But for us to look for sells, the market has to create an indication first, a correction later, and then we look to sell. All right, now you get it. All right, now let's get into the trade that I had. Okay, let me just play it out and see. Okay. Okay. I'm gonna be real with Chill. So over here, um the market, right, kept making like a rejection. It was rejecting. So there was rejections over here in this zone. So it looks more like a sell, right? As you can see, the market was creating. Okay, I think I'm confusing you with this box, guys. Let me remove it because I really want to break down this trade so that you can understand. So that even if when you go back into the charts, when you see this, you should know. Okay, so you can see here the market was creating like lower highs. Okay, lower highs, and we were looking for some buys, so kept creating lower highs. So you are gonna say, okay, but why didn't you buy here? Because the market was creating a bearish trend. Okay, the market was bearish. Look, the market was creating these. So you have to be aware of these. So this is sort of like a trend inside a trend. So this is important so that you can get perfect entries. And then the market continued. Now it shifted into some bullish and then went bearish again. And as soon as the market broke these highs here, that's when it only became bullish. And it also had the potential to be above these levels. And I will show you how I entered this trade over here, right? So I hope that makes it clear why I didn't get some entries over here. I would have been stopped out and the market was bearish at the same time. So let me delete this. All right. So let's make sure everything is well set. Okay. So somebody will ask me, why didn't you enter here? This right here was on Monday and the session, let's see. We use New York session for entries. Okay. We use New York session for entries. And this was late. Okay. This was towards the end of New York. All right. So I couldn't enter there, and there's no like a there's no bullish strength in these candles. Hence, you can see uh the candles were way too small compared to these candles over here. So when the candles become smaller than they usually are, right? This shows that there's no momentum in the market, and the market is, slowing down or might potentially reverse. So the next day on Tuesday, the day I took the trade, which was yesterday, today it's Wednesday actually. So I waited for New York session to kick in. So this was before the New York Open. Actually, during the New York Open, right? 9:30 EST time, I entered. So the 30 minutes time frame to show you guys, I entered at 9:30. Let me wait for. Okay, for this trade, I didn't really like drop down too much to lower time frames because it was straightforward, clear. Okay, yeah. So at 9:30, I'm looking for some buys. Notice how the market at this time over here, it was above the previous higher high we had. And I want to show you how it was. So let me not spoil everything for you. Okay, as soon as I saw the market close right at 9:30 like this, I saw that this candle was bullish more than these other ones. So I saw that buyers might come in strong, and my TP was right here. And I did not make this up, guys, but the screen recording I showed you guys in the opening video is proof. I showed you the before and I showed you the after, and this is it. ICC. Oh, that was way too fast, but yeah, it's cool. TP smashed, and that was crazy. Yeah. Yes, it wasn't a real account. Obviously, it was my first time coming back into indices, but starting from next week, I'll be going into uh the indices. So yes, I have to be careful and everything, but I'm ready for it because the only pairs I will be focusing on is gold, Nasdaq, US30, S&P 500, and only two currencies, GBP USD and USD JPY. And the rest I won't trade anymore, you know? And yeah, that's it. The reason why I chose two currency pairs is because they are safe haven, GBP USD and USD JPYs, and there are major currency pairs, and GBP USD moves a lot faster than most pairs, and USD JPY, I don't really trade it. I just use it to correlate with the GBP USD because I like to see what USD JPY is doing so that I can be able to trade GBP USD. But yeah, guys, make sure that you like, share, comment, and subscribe. Please share me your ideas. Tell me what you think about this video. Should I make more videos like this? If yes, then every Sunday I will share setups with you guys.